Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Welcome back to the Daily Gold podcast. This is being recorded on the late morning of Thursday, January 9th, 2024. Thank you so much for tuning in. And with me today, we have a company interview. He's a returning guest, John Miniotis. He is the president and CEO of AbraSilver, who you may recall they have a 260 million ounce silver equivalent deposit, Diablillos, in Argentina, which, as we discussed last time, John, you can't really say this with most jurisdictions nowadays, but this is actually for mining companies suddenly getting a lot better. And John, the reason you're joining me, the main reason is to update our audience on your updated PFS, your pre-feasibility study that you put out at the end of last year to show the main difference is all the new policies that are going to be implemented in Argentina by the new president Milei. Let me give you the floor to discuss those new policies and how that impacted the PFS.
Excellent. Well, first off, thanks very much for having me back on, Jordan. We really appreciate it. Great timing to provide an update here as we're kicking off the new year. Yeah, in terms of the updated pre-fees, of course, we announced the update in December, and this was an update to the pre-feasibility study we had done earlier in the year. So I believe in March of 2024, we announced the pre-fees. At that time, had good economics already. But really the key change was the positive RIGI incentive regime that was implemented into law in Argentina in July. And that states it's really meant to encourage new large-scale investments across all sectors, including mining, into the country. And it offered some very, very attractive incentives to bring foreign funds into the country. And so for new projects going ahead, if you apply for RIGI by July of 2026, you could qualify for significant tax reductions. Your tax rate goes down to 25% instead of 35%. It eliminates all export duties. Previously, export duties currently are actually quite high in Argentina. It's 8% for gold, 4.5% for silver. But if you qualify for RIGI, which we do, those will be waived. And so that's a very, very significant savings. Very importantly as well, there'll be no more foreign exchange restrictions. And so really helps provide stability obviously for large scale projects here. And again, all of these incentives are being offered in a stability agreement which lasts for 30 years. And so well beyond the mine life of our existing project. So yeah, that RIGI regime is obviously something that really warranted an update to the pre-fees so that we could just update the economics. I think overall it ended up having a tax savings, the total tax export duty savings were over $400 million US. That's undiscounted free cash flow over the life of mine. But obviously very, very significant. And so, yeah, we updated that pre-feasibility study. I think, the economics are very, very compelling. We updated it using still very conservative commodity price assumptions. So we used just over $25. I think it was $25.50 an ounce silver. So clearly well below current spot prices, and $2,000 in 2050 maybe on the gold side. So very, very low commodity prices for both gold and silver. And with that, with those commodity price assumptions, this had an IRR of just under 30% and just over $1 billion Canadian net present value here. So we have a large scale project, producing a lot of silver and gold here, producing over 16 million ounces a year for the first 5 years. Importantly, the cash costs are extremely low. It's in the lowest quartile of the cost curve. So it was great to come up with the update there. Shows the robust economics of this project. And now, of course, we're working hard to now put everything into a feasibility study, incorporating the additional 20,000 meter drill program that's currently well underway and will be finalized within the next couple months here, and making sure we have the permits in place by the end of this year, and making sure this project's ready to apply for that RIGI regime in early 2026, early next year.
Okay, so before we get to that, let's go over some numbers in the study. I mean, I guess these are kind of rapid fire questions, but okay, let's talk about the AISC. So, tell us the AISC for the life of mine, but also the first 5 years.
Yeah, so it was about $12.70 an ounce. That was the life of mine, all in sustaining cash costs. And for the first 5 years, it was under $11.50 an ounce. So yeah, both those figures are clearly in the lowest quartile. Current spot silver prices, you have like $20 margin off every ounce of silver you're producing. And so when you're producing over 15 million ounces of silver at $20 margin, again, huge free cash flow, given, and yeah, what's important is, we're able to achieve those low cash costs because the mineralization is close to surface in oxides, with very good, gold and silver grades here.
And let's talk about the NPV at current metals prices. I know you said the base case. I mean, I know that I know that there's certain ways that people do the base case, but for me, it's kind of irritating. I mean, 2000 gold, we got gold at what, almost 2,700.
Yeah.
The silver price, even though it's corrected 25%, still way above what you use for the base case. So let's talk about the calculation at current prices, the
Yeah.
NPV.
Yeah, that's even more stellar. Of course, it's a hugely sensitive. So as you go from $25.50 to $30 an ounce silver, and as you increase the gold price again by $600 or $700 to current levels, our NPV increases by about 80%. So it goes from 1 billion to roughly $1.8 billion Canadian. And so when you look at that from a share price perspective, when you divide the net present value divided by the 128 million shares we have outstanding currently, your net present value under the base case was about $8.30 an ounce or per share Canadian. But at spot prices, it's north of $14 a share. So you can see, huge leverage to both silver and gold prices. And obviously at current price levels, the economics here are very robust.
One more thing, yeah, let me follow up because, and this is in the numbers, so included in that is a big jump in the initial capex. I know that you moved some costs from operating costs into capex. Maybe you can talk about the jump in the initial capex and why, and also what you're expecting as far as capex. I mean, how you're going to keep that and manage that when you move
Yeah.
from a PFS to a feasibility study. As we know, as you move between these studies, things get more stringent. So it's normal for there to be a little cost escalation.
Correct. Yeah. So happy to talk about the upfront capex now is estimated just over $540 million. So it's quite a significant increase from the prior figure, which I believe was about 370. But some of that is so $50 million of that was always in the life of mine plan, but it was previously allocated as operating cost. And so right now we rescheduled the mine plan to optimize it. We brought forward some high grade mineralization into years 1 and 2, which were previously in years 4 and 5. And that's going to require some waste stripping to be done earlier on. And so that is just kind of moving money, instead of coming out of one pocket, which was operating costs, it's now coming out of the capital costs. So that's a bit of an artificial or sort of more of an accounting adjustment. So that's $50 million, was always in the net present value. This was not a knock to the net present value. It's just now because it's pre-production, when you're spending money before you have commercial production, you capitalize it. So instead of putting it in OPEX, it's now in CAPEX. So that was $50 million. However, there were some significant cost escalations. One of the key things that has happened here in Argentina over the last year or year and a half now is they've always had several FX rates, so foreign exchange rates. You've had your artificially low historically, your official FX rate, and then you've had a blue chip swap rate or a market rate, if you will. And those used to be very, very significant. So the difference, the delta between those two rates used to be well over 100%. This was about 18 months ago. So in the prior study, we were able to benefit from having these different FX rates because then you could have FX gains as part of your, moving money in and out. And so we had about 60 million, 60 million US, previously sort of in FX gains roughly, which was helping sort of artificially lower the capital costs in the initial study that we did back in March. That blue chip swap rate now has very much aligned itself with the foreign exchange, the official rate. Now that spread has narrowed to less than 5%. I mean, it's a negligible amount right now. And so it's positive for Argentina as a whole, I'd say. I mean, most countries, if not all of the countries in the world, only have one FX rate. And so I think that's the goal for obviously President Milei going forward is just to have one FX rate. But that has led to some inflationary pressures for sure. So that increased our capital cost estimate by about $60 million. And so 60 million there, we're no longer able to benefit from having the various different FX spreads. So there's been some US dollar inflationary pressures within the country, but that now again the spread now assumes there's no more FX gains, and so I think that was a one-time adjustment. Normally, if we did not put out an updated pre-feas, we would have had to take that adjustment into the feasibility study. So I think we would have seen that increase come into the feasibility study. But this interim update of the updated pre-feas, I mean, we've now taken that hit. There's no more sort of blue chip swap rates. It's giving us sort of artificial FX gains. And so going forward, I don't see that as being an issue. I mean, we're assuming, again, zero FX gains going forward. And so, I think now we've aligned ourselves with the current market conditions in Argentina. And so, I think that was $60 million. And then there was also $40 million of additional sort of indirect costs that were not previously assumed in the prior pre-feas that we're now assuming in this update. And so we have a slide of that in our corporate presentation. There's a lot of detail. But I think right now, look, it's a very detailed, we think it's a very accurate assessment to build a project like this. Right now would cost you just over $500 million. But what's important is as we look forward, there's still some significant opportunities to bring down that figure. And so we're still assuming we would build our own power plant here, which costs about $40 million. But there is absolutely potential that we could connect to grid power. And so, in fact, one of our key shareholders, Central Puerto, is looking to extend the power line and provide grid power to ourselves and the nearby lithium projects. So that would remove $40 million from the Capex. That would be a very substantial savings. And there's other opportunities as well that we're going to review and hopefully be able to include in the feasibility study.
Yeah, I'd like to talk about some of those optimization opportunities. I do want to get to the drilling around Jac, but
Sure.
can we? That'll require more time. So can we talk about the other ones first outside of that? I know
Sure.
you touched on a few already, but outside of the exploration
Yeah.
at Jac, what are the other opportunities that you see?
So one of the big ones I'd say is incorporating a potential heap leach scenario into the mine plan. So right now, again, we've been quite conservative. I mean, we've used a cutoff grade for the mine plan of 45 grams per ton of silver equivalent. And we've assumed anything below that is uneconomic. You can't process it through the agitated leach plant. So just put it on the waste dump. And so we're not getting, of course, you have to mine that, move that, place it on the waste dump. However, a very, very significant portion of that waste that we're counting as waste does have decent grades of gold, obviously much lower than our current resource, But, it could have hundreds of thousands of ounces of gold between, 0.3 grams, 0.35 grams per ton of gold within that. And so it likely makes a lot more economic sense. Instead of moving that material, placing it on a waste dump, you can move it, which you're going to have to mine anyways, but you place it on a heap leach pad. And then, of course, you recover that gold as that material gets leached out over time. And so we're studying that right now. There's still some more met test work that we need to do. It's underway actually right now. And I think, later on this year in 2025, I expect we'll have some sort of announcement on the potential economics of that heap leach. And I think that could be, it could add, again, hundreds of thousands of ounces of additional gold, which is currently being treated as waste. And now you're going to be getting significant revenue from that as well. So that's a significant opportunity for sure. Our team's evaluating that. I mentioned the power plant. That's another significant one. Again, $40 million we would save upfront in lower capital costs. And we would also save on the operating cost side. I think right now we're assuming our power cost to generate power ourselves would be roughly $15 per kilowatt hour. That could be almost half of that if we're able to connect to the grid. And so it brings down your capital cost, brings down your operating cost. So that's a very sizable, significant opportunity as well. Again, we'll incorporate that into the feasibility study. And then, of course, as you mentioned, incorporating the 20,000 meters of additional drilling, we feel we've grown the Jac deposit. Oculto has grown as well. And so we'll prepare a new mine plan once we have all those results in.
Yeah, again, I want to get to that, but just a quick follow-up on the heap leach potential, John. How would that fit into the mine plan? Would that, and again, I know nothing is certain. This is a forward-looking statement, so we're just thinking what could be. It's not certain yet, but potentially, how would that come about in the mine plan? Like, would it be at the very end or somewhere in the middle?
Yeah, it really remains to be seen. I mean, you could easily take a stage development approach. Obviously, the current heap leach is not even in the, we don't even have a formal resource on that yet. So it's much earlier stage. So we're not going to have that in the feasibility study. I don't think we could advance the engineering there and, incorporate that into a formal mine plan. But from a practical perspective, we're permitting the existing operation. We expect to have the permit by the end of this year. We're going to have a feasibility study completed on the agitated leach process, again, in early next year. And then that can move towards a construction decision. But over that time as well, you can incorporate a heap leach scenario, either in parallel or you bring on, the heap leach earlier or later in the mine plan. It really depends on your capital costs. Obviously, there'll be some capital costs associated with the heap leach plant. But yeah, it really gives us a lot of optionality, a lot of flexibility. Potentially, you could even start off with the heap leach plant, which is much lower capital cost because you don't need your processing plant, which is over $100 million of Capex. So yeah, it gives us a lot of optionality, but we're going to have to work through that. And I think, again, later this year, we could be making an announcement on that once we have more information.
Okay, great. Now let's move and talk about the current program and Jac North. I know you're calling that Jac Extension now. It seems to be mineralization seems to be part of one bigger deposit known as Jac. So you're calling that the Jac mineralization or the Jac Extension. I'm sorry about that. Okay, let's talk about the current program, and we can highlight Jac. I think you have an image that you like to bring up.
Sure. Yeah, I can just bring up our corporate presentation here. Give me one sec. I think that's these are some of the slides in our corporate presentation. I find it helps just visually, as we talk about some of these targets. Yeah, where we've been drilling, of course, right now in the mine plan, there's two main deposits, Oculto and Jac. And so Jac is the higher grade silver deposit. It's the recent discovery we made back in 2023. And this is where we've been focused on drilling around Jac. This next slide shows you. These are the three key areas. And so we had talked about Alpaca, there was Jac North, Jac South, but all of these will fall into the Jac deposit, we feel. And so we've been stepping out Jac Again, you can see some of the grades we've hit. We announced these, of course, in last year, 2024. So hitting 250 grams of silver over 50 meters, 277 grams of silver over 30 plus meters near surface in oxides. So some of the intercepts have been above resource grade. And again, that's really the key. So the key area that we're focused on, because we already have 250 million ounces silver equivalent here, it's already a large deposit. The current focus is on just targeting the higher grade ounces. We feel we're not going to really drive a lot of value if we're drilling out lower grade silver ounces that are going to come into at the end of the mine plan, because that's kind of 15, 16 years out from where we sit today. And so the current program is 20,000 meters, phase 4. It'll be wrapping up later this quarter. So it's, over 80% complete as we speak today, but still some more drilling to be done. And it's focused on growing Jac, extending the high-grade silver ounces there. Also infill drilling Oculto, converting waste to ore where possible. And of course, again, the higher grade ore is obviously the key areas that we're targeting. You can see we had an infill hole here at Oculto, which had extremely high grades. And then also we were focused on expanding Oculto towards this northeast, and we feel there's good gold mineralization out in this district. So yeah, our team's been busy, been very successful. Again, we still have lots more holes to be announced, and a few more holes to be drilled. But once we have the results from the 20,000 meter drill program, we'll be incorporating that into an updated reserve and resource estimate, sort of by mid-year this year.
Okay, so I guess a quick question. So it's a 20,000 meter program. Based on what you said, so you've drilled 15 or 16,000. How many of those meters have been reported to date?
I'd have to go back and look at our last press release. In each press release, we state how many meters have been drilled and how many have been reported. I know we have about 20 or so holes at the lab yet to be reported. And so, yeah, we have, yeah,
So
but my guess would be over 65% have been reported to date, and maybe about a third left, with some of those already at the lab and some still remaining to be drilled.
okay, 65% of the entire program, or of
Yes,
what
of
you've
the entire
drilled.
program.
Oh, okay,
Yeah,
okay. So you have about we could just say 13,000 have
roughly.
been
Yeah, I think
reported.
that's a good estimate. Yeah.
So that makes sense. Probably about 3,000 to be that's been drilled but not reported yet, and that makes sense versus based on the 20 holes that you were
Yeah.
talking. Can you I guess give a rough breakdown of the 20 holes, exactly like where they are and
Yeah, so most of them are a Jac, so towards the southwest area. There's some holes at the Cerro Bio target as well. So I know we have a handful of holes that we're waiting for results from. That's in the northeast of Oculto. And then there was this new target here. I think we called it the Sombra Zone. There we had drilled one hole initially that gave us good results. And so we followed up drilling there. We drilled 3 or 4 more holes. And those were at the lab. So we should be receiving those results shortly as well. And so, yeah, these are the key areas. I mean, you can see. So it's, Jac, the extension areas at Oculto, and at this new target here, number 4.
so have you decided where you're going to drill the last 4,000 meters or so, or is that dependent on the results that are coming in right now?
Yeah, it's always dependent, but yeah, it's still going to be mostly focused again at Jac, at Cerro Bio. So yeah, the exact position of the holes. I know we always plan sort of 10 holes ahead, and then as we get back results, we can sort of change the plans, modify them if needed. But yeah, it's those same areas. So at Oculto and Jac, it's been the same areas here where we've been drilling, and we're looking to define the limits of Jac, and then again incorporate that into the feasibility study. So that's key, and these are the highest grade areas where you have high grade silver and hopefully some higher grade gold at Cerro Bio and at Oculto as well that could come into the mine plan. Now, the key is we also do have this sort of porphyry complex sort of target here. This is an entirely separate, I mean, it's still within the Diablillos project, but this is an entirely separate area that we've never before drilled. And so we've never reported any results here. But we did run some updated geophysics earlier in the year. We saw these big chargeability sort of anomalies there. And so our team has now completed the 4 initial holes. So we drilled 4 holes in this new area. You can see some of those holes were down deep, about 700 meters or so. And we're waiting for these results. And these we expect to receive within the next month or so. So within the next few weeks, we expect to receive the results from these assays. And of course, we'll announce those. And this could be a major focus. I mean, right now it's a question mark. We don't know if we're going to continue drilling here or not. Obviously, dependent on the grades that we encounter here. But yeah, to the extent we have some high grade mineralized zones here, this is a big area. Again, you can see sort of the dimensions here. It's 3 kilometers and over 2 kilometers wide. And there's multiple targets here. So this could be an entirely new area of focus for our exploration team, but that's going to be entirely dependent on the results of these first 4 holes. So I'd say stay tuned for that. And then once we have those results, happy to jump back on a call and give you an update and let you know our thought process once we have the results.
One follow-up on the porphyry potential there. These 4 holes, is this the kind of, I mean, it might be hard to say this early, but is this the kind of potential project or deposit where you can glean a significant amount of information with a couple of these really deep holes? Or is it something where you need a few more programs to have a better idea of what could be down there?
Yeah, so great question. I mean, of course, you're not going to be able to declare a resource or anything off 4 holes, and these are holes. I mean, are very widely spaced. So you can see, we're not infill drilling anything here. We're just trying to figure out where the source could be here. So the source porphyry that's driving this mineralization. And so yeah, I think right now we know we have a very big system. We don't know obviously the grades, which are the key question, and we don't know how deep it goes. But I think this is going to give us good indication. Having some of these holes extend down well below the chargeability anomalies here, go down 700 meters. Once we get these results, we'll know if further drilling is warranted. And then we'll be able, with our exploration team, to plan out how many additional meters will we need for next year and what makes sense here. So I think this is kind of a phase 1 approach. Want to see if we can encounter some high grades, but this is clearly a very large system here, potential for a large scale deposit, but extremely early days. Obviously, we don't have any of these holes to report yet, so premature to start talking about sort of size potential or grade potential at this time.
Okay, just one more question for you. Let's circle back and talk about Jac and the potential of Jac overall, which, you know, as you said, it's becoming one big deposit. So I think the Jac resource, around 35 million ounces, very significant. Again, people understand the grade of this is really high, so those are really valuable ounces. And again, we're into forward-looking statement territory, but based on what you've seen so far, that 35 million ounces at Jac, I think you're really confident you can get that to 50. But beyond that, I mean, could it get to 70, 60, 65? I mean, is there any new information or any confidence that you have beyond 50 million ounces?
Yeah. Yeah, so again, hard to obviously sort of with my crystal ball figure out exactly how many ounces we're going to have at Jac. But just to give you a sense of how important these ounces are, I mean, as you can see in the mine plan, for the first 3 years, we're producing well over 15 million ounces a year. And those are the key years, the highest grade years at both Jac and Oculto. So if we're able to add one more year like this, so bring on sort of year 4 and increase the grade profile here, each year, we're averaging over 220 million ounces a year, or $220 million per year in free cash flow. And that's at, very conservative commodity price assumptions. And so it'd be well north of, I believe, $300 million at current commodity prices. So even adding a single year here at these elevated grades adds hundreds of millions of dollars to your free cash flow profile. And so, yeah, I don't think Jac is going to double or triple in size. I mean, I think it's going to be, on a percentage basis, it's going to be a significant increase. It's not going to be a transformational increase. But yeah, I think the value here is adding, if we could add another 15 to 30 million ounces from Jac in these early years, you're significantly increasing the economics of this project, and that really will drive value for a feasibility study here. So that's really key for us. And that's why we've been focused. The phase 4 drill program is really focused on finding higher grade ounces. I think down the road, there'll be potential taking this project from, it's sitting currently over 250 million ounces measured and indicated. You could potentially increase that to 400, or who knows? I mean, down the road, you can have a sizable increase, but that's going to be lower grade. And so, that mineralization could come in towards the end of the mine life. So we're not going to be drilling for that right now, because that's, 15, 16 years down the road before you get to produce from those lower grade ounces. And so for us, what's going to drive value is, again, the heap leach, making sure if some of the waste can be converted to ore, obviously increasing the grade profile in the first 5-6 years of the current mine plan, and then optimizing, obviously, the operation overall as well.
Okay, one more follow-up. So close to 260 million ounces silver equivalent. That's the Diablillos project resource right now. I know you're going to update that. And look, I know that getting 300 million ounces is really superficial at this point. It's more about, as you're saying, the grade, the quality of the new ounces. You're looking for higher grades. It will grow, but what are the chances that could hit 300 million ounces when you do the update this year?
Yeah, no, I think, look, if you look at the trajectory, I mean, I think that we've been growing this, as you know, it's a marathon, it's not a sprint. It's taking us a long time, lots of drilling here. But over the last 4 years, we've doubled the size of this resource. And so you can see, I mean, we've grown this between 20 to 35% per year. I think another 20% increase is certainly achievable here. And I think that's all you need to get you to the 300 million ounce marker. So yeah, I don't know if it's going to be above or below that, but yeah, I think it's reasonable to continue to see this trajectory here, especially as you're drilling higher grade ounces. Again, you need fewer tons to get more ounces when you're hitting these high grade zones like we've been doing. So I think, yeah, I think what's important for us as well is that we've been able to do this and keep a very strong financial position. So in this sort of market, you don't want to be spending all your cash drilling and looking to grow and achieve artificial sort of threshold. We've been drilling very conservatively, maintaining a strong position, but as you can see, adding value here through the drill bit, with our average discovery cost being very, very low.
Yes, absolutely. John, as we close here, is there anything you want to mention that we did not cover today?
Look, I think this was a great recap. I think we've had a very successful year last year. We delivered on all the key milestones. Obviously, the updated pre-feasibility study. We've had lots of exploration success. And importantly, we're able to maintain a strong financial position. So I'm very happy with the outcome. But I think looking forward, it's very, very exciting. Now this project's really moving close to that finish line where we have a feasibility study. We're getting our permits, environmental permits, and yet we still have significant exploration upside, not only at Jac and Oculto, but also that Porphyry complex, which we're quite excited about. So a very, very exciting time ahead for us. And as you mentioned initially, Argentina has really turned the corner as well, and encouraging investment. You've seen BHP and Lundin Mining acquire Filo. You've seen Rio Tinto invest significantly in Argentina. A lot of majors are obviously sort of now putting their money in the country, which is a great win-win for all. So we're in the right jurisdiction at the right time. Let's hope for some higher, stronger gold and silver prices, and if we're able to achieve some of the catalysts we have coming up here, I think it could be an extremely exciting year for our shareholders.
Okay, John, thank you so much for coming on today and providing an update for myself and all my listeners and followers. We really appreciate it, and we wish you and AbraSilver all the best in 2025. Look forward to catching up over the months ahead so we can cover the most recent developments again. Thank you, John.
My pleasure. Thank you.